get our first session kicked off, and we have John Amos coming up to introduce all of our panelists. Enjoy.
The older I get, the harder it is to get upstairs, that's for sure. I was worried all morning that I'm going to fall flat on my face. I've done that. Anyway, I've been associated with Breakbulk conferences for all 32 years, and it's really good to see how it has come back this way. And I see the audience is full of the real players on both sides of the dock, and this first panel that Steve Hill of McDermott is moderating is really going to be interesting because the panelists are going to give a very honest appraisal of what they see in the next few years. We've had several teams meetings on that, and many of you know Steve Hill of McDermott. He's had a long career, and before McDermott was with CB&I, so he's a real veteran. So I thought what I should do for the industry outlook is introduce Steve Hill, the moderator, so he can introduce his panelists. Is that okay? Okay. Steve Hill.
Thanks, John. Yeah. Indeed.
Yeah.
Don't trip down the stairs, though.
Yeah, so we.
I hurt my hamstring running.
You got it? Good morning. Welcome to this session. I think that we have a good panel here for talking about things that are on our minds, all of our minds, I believe, and that is predicting the future. What's going to happen. We all know where we've been, some of the things that have caused destruction within the supply chain, so I won't elaborate on that unless you've been living under a rock for the last 2 or 3 years. But I think that this panel is assembled from various parts of the industry and want to pick their brains a little bit, get a little bit of their perspective from their particular point of view from that particular part of the industry that they're in. And so without further ado, I'm going to introduce them, hopefully in order. So I'm not sure what the seating, there is a seating arrangement. I believe Michael, okay, come on up. Yeah. I think idea. Yeah.
Oh, nice jazz. Nice jazz.
Yeah.
Hello? So it's going to be an open forum. I'm going to kind of lead the way here a little bit, but I want this lady and gentleman to open up and kind of give us their perspectives, and introducing the panel here from the very first chair is Torben Walks with DHL Global Chartering, Felix Scholler with AAL Chartering, Dea Chinkao, no, that's Quanco, sorry about that. Ben Collins, MSC, Michael Lunn with BIMCO, and Anders Hirup, Jumbo SAL. So I'm going to start this first question to the group, and it's a really wide open question. We talked about this as a group prior to this, and I'm going to point this to Dea. Ladies go first, right?
Thank you very much.
And that's what is the new norm going to look like? Are we in the norm now? What is, from your perspective, what's that new norm going to look like?
Well, first of all, when we are asked to present answers from a crystal ball, I'd like to just qualify that we are in an iterative, ever-changing industry. So we might have that answer right now, but possibly by tomorrow it might be different. So, but to not escape the question, I would say that I think we've hit the peak with the black swan event that we had, that is the coronavirus. For the very nature of what a black swan is that it's highly unexpected, it's uncertain, and you don't know what to do with it, right? But as human beings, and we've got a lot of smart people here, a lot of smart people in the room and beyond, we essentially learn to very quickly try to mitigate whatever's in front of us. So I do believe that even with the pandemic, I mean, it's not gone. It's just that we've really exponentially moved forward with how we're going to continue with what we're doing, especially because the supply chain is so essential for the daily living and for infrastructure build. And we've got some energy issues, obviously, that we know. So it has stabilized to some degree. It is a new norm. That is my answer to that, because now we've got another variable that is now a constant. Now, whether it's going to be, accelerated in certain points in time, sure. Sometimes there's lulls that happens as well. I mean, we've all dealt with it. We've had family, we've had, colleagues that have gotten sick, and it's affected everybody differently, right? But I do want to say that at this point, we also have to think about scenario planning, because I know we're busy, but at the end of the day, we're also looking at an energy crisis that is looming. There is, even just today, the latest news is that there's a pipe leak, right? And of course, the price cap that's looming in December, with the G7 proposing that. So all these things, all these inputs, I'm so sorry. Are we okay? Yeah. Thank you. All these inputs are the things that we have to think about that affect our business. So yes, it's not easy to answer the question, but clearly we want to have some sort of vision of what's in front of us. Yes, some stabilization, the summer months, which is typical, cyclical, slight slowdown, but in general, our levels are pretty much, I believe, is where we're going to be. There's a lot of forward bookings going on, and at least from our standpoint, we encourage that. So.
Yeah, very good. Yeah. Thank you, Dea. And then, from the carrier's perspective side of things, I'll ask maybe Anders to give, what his thoughts are on that.
I think we work in an industry where we pride ourselves to say that we are flexible and we're ready to adjust according to our clients' requirements. And that has definitely been a task for all of us the past 3 years. You add a pandemic to the mix, you add an invasion here, you add geopolitics that dictates a completely new energy industry worldwide. And that definitely is something that's going to push the entire industry. We see that on the multipurpose side, as Dea said, it's gone down a little bit, and that can also be explained by the lower oil costs, which we've seen over the summer. On the heavy lift side, we are seeing an increased activity. We see early commitments from our clients securing the heavy lift tonnage. When you talk unit weights of 1,000 tons plus, those ships and those contracts have been entered several years in advance now. So the entire landscape, the global logistic landscape, has changed the past 2 or 3 years, definitely. And it's earlier commitment, it is flexibility, and it's geopolitics dictating this.
And so maybe speak to us a little bit. This is open for all. That we've seen that the global fleet has changed significantly over the last couple of years. A lot of changes into the multi-purpose vessels going over into container market, and really a disruption in the global fleet as we previously knew it. How is that evolving now to come back to, I guess, using that term again, normal? Is that are we seeing any stability in that, and what does that look like going forward with the fleet as we knew it and where it's going now?
Steve, if I may answer this one, I think that we have actually a very stable supply side on the tonnage side, right? So even though some ships might have gone more into container trades, I think the majority of project and breakbulk carriers were still committed to industrial projects and breakbulk. So I think we have a very, very steady supply of ships for the years to come, and of course some new building programs. More interesting though, and that's why I think the general outlook for the industry is quite positive, is actually the fact that the demand for the cargoes that we all work with has an extremely positive outlook. If you look at renewables, there's going to be so much wind to be transported, erected, then oil and gas is back because of the higher energy prices. So that might be a problem for consumers, but for us as players in the industrial project space, it is a good thing. Possible infrastructure investments if really recession comes and governments do spend more. So I think overall, even if the cost of doing business has increased, the certainty that there will be business for us to do in the next couple of years is a good thing. It's a good thing. And I mean, going a little bit back on the fleet side, I think that, as we discussed in the past, a lot of the shipping companies in our space are privately held, smaller companies, and we will invest in new ships, in new technologies, but it will only be a gradual build-up. And also for us, it's a bit of a difficult point in time to build new ships because of the call for carbon zero, right, in 2030, and simply there's no technology for us to build the perfect clean ship yet. So we're all building these ships which are very innovative, with the technology that is now available, but I think we all need more time to really come up, or the industry, the shipbuilding industry, to propose technologies that will allow us to build these zero carbon ships in the next 5 to 10 years, I'd say. So, yeah.
And so that's a good segue into this sustainability, carbon reduction. It's on everyone's mind. It's a huge topic, and it blends in with so many other initiatives that are going on right now, especially when you talk about fuel and the unknown regulations that we're facing in the future. The decarbonization tax in Europe that's just around the corner from us. How is the industry adjusting to these unknowns that exist right now? But you have to be prepared for it very soon. And then from a shipper's perspective, how does that flow down? How do you see that flowing down from you as the operator down to the 3PL, and then ultimately, because we know it's pass downs, right? We know that. How's that going to be justified going forward? Torben, any ideas?
Yeah, I would say from a freight forwarder's perspective, it's clear that first of all, we have to measure our carbon footprint. We have to find a way how to get there, to have a fair evaluation of this, and then to figure out how to adjust to it. I mean, we're glad and happy to see that carriers are now investing in new tonnage, in new technology and on the tonnage. We as DHL, we're facing a Go Green initiative for zero carbon emission in 2050 latest. So we're very glad to see what's going on. We believe that there's more demand on new tonnage. We are trying to find ways how to even support carriers on this. We are investigating on that. And so coming back to your first question on rates and how do we see the future, there will be a new normal, that's for sure. Will it be on a high level or low level? From our perspective, I would say we hope that it's a fair level where both shippers and carriers and forwarders are on a certain level where we all can survive. Certainly the freight rates we have seen 3-4 years ago have been far too low to maintenance the vessels, to keep the vessels on a first-class service. The rates we have seen in the last 12 months were probably far too high to demolish our economy in a way. So what we see right now coming back to a normal is what we believe is the right way to go.
Good.
No.
Is this working?
Yeah.
Wonderful. There we go. I think on this point, to be honest with you, when you're talking about the introduction of the new fuels and the environmental regulations coming up, when we talk about the new norm, we still have to get through a period, certainly, where the vessels that are currently in service are having to go out into dry dock to get retrofitted to try and do some upgrades to meet the new environmental regulations. This adds a certain pressure on the fleet as well, to be honest. And during the last few years, MSC's fleet on its own has grown by 20%, just to try and counteract also, as well as the natural growth that we see coming up because of the investments which was referred to earlier. We have to have a certain allowance within the fleet to take some of the tonnage out to be upgraded to meet the environmental regulations coming up. We have to find a way somehow to iron out the extremes up and down to find the middle ground in terms of service and price.
And so, looking at the, again, staying with the theme of the global fleet and what and the disruptions that we've seen, what about future port congestions, the things that are the big unknowns for us right now? Is that appear to be stabilizing, or how does the flow of the traffic appear to be going forward?
I think stabilizing is quite an optimistic look at it. It seems to be shifting from different areas and even within the countries in the US, from the West Coast to the Gulf, etc. Throughout Europe, we're seeing many discussions, and even in my home country in the UK, stevedores now going on strike more and more. And I think because the supply chain is and has been so stretched that any little disruption, the impact of that disruption is magnified more and more and more. And I think what makes it so complicated is it's not because of one factor. It's the impact of a factor, which then hits across all sectors. And to be frank, whether a container carrier, ro-ro, multi-purpose, the impact is similar.
Right.
It's just the scale that changes.
Right. Which all comes under the definition of risk, right? And we all face certain elements of risk. And how do we share that, going forward? I know there's a lot of new contractual language that's happening in the industry right now. We have maybe our contractual language that we like to see versus someone else. There's not really a norm for this. There's not really a set of standards, if you will, of how we agree to share in these risk factors that exist. So we look to someone like BIMCO to help us out with that, and I know that BIMCO's been very involved with dealing with some of these issues that you're seeing across the board, across the globe. Give us a little bit of insight, Michael, of what BIMCO's doing to mitigate some of these risks.
Thank you. We are working on a whole range of things, and this is a long journey we're on, which will involve everybody. First of all, we already done an EEXI clause dealing with some of the issues, and right now, and we also recently published an EU ETS clause that a lot of people will also be needing. And there we basically state the fundamental rule that the one providing and buying the fuel is also the one who are responsible for allowances, kind of setting the principles for how to allocate the cost related to this. And this is one of the examples of the things we are going to do in the coming years. We're working on a CII clause now. That has turned out to be far more complicated than the other things we've been working on, but we will hopefully come with that in November. And this reflects that we need to look upon how we work together in the industry. We need to look into the contracts. What are the relationship between the charters and the owners, and perhaps even further in the chain. And I think we have a lot of work coming up here. And in BIMCO, we want to engage in that. And we will have as one of our big priorities in the coming years to exactly do that, to create the framework for the industry to decarbonize. And that will require the freight forwarders, the owners, everybody needs to chip in to take responsibility in that. And I can assure you, we all of us have a lot of work to do here. Thank you.
Yeah, good. And
I do think the problem in the industry is, and the multipurpose industry that is that half of the fleet is 15 years older. Emissions were not really a concern when they were constructed, but now they're trading in a world where we see the EU starts January 1st with the emission control, and that's a carbon tax. So we really don't know how much it's going to be. Right now, the price is about 85 euros per ton of CO2. Which for our ships would be a daily cost of $15,000, $10,000 to $15,000 per ship per day. That's a lot of money. And then you can say, yes, the market is strong right now, but you also come out of 13 years with absolutely no money in the segment at all. No investors would put money in the multipurpose sector. So that's why you have old ships. Building new ships now, yes, you can do that, but it's going to take you at least 2.5 to 3 years from the signed contract until that ship hits the water. And that's because they're busy building container ships. Yep. Container ships are easier to build than multipurpose and heavy lift ships. So if steel prices are high, shipyards are busy. I mean, the price of a new ship is very high. We ordered 4 or 6 new buildings finally, and they are what we call carbon neutral ships. So they're able to connect to land power when they're in port, and they're able to burn methanol, green methanol, at sea. So those ships will be able to have no carbon footprint whatsoever. But those ships are coming out several years from now. But the rules goes into effect January 1st next year, so 2 months from now. And the question is, who's going to pay for that? I mean, oddly enough, the ship owners all agree on one position, and oddly enough, all the cargo owners agree on a completely different opinion. Yeah. Ultimately, it's going to be the consumer who's going to pay for it. Then you add a little bit of global problems all over, situations. It's going to be very difficult in the future, that's for sure. So emission is just one, and that is just the one that kicks in next year. We have further environmental restrictions coming upon the entire global fleet. And again, it's all going to cost money.
And so that cost that you're speaking about, has there any discussions of how that's going to calculate out, how you're going to recover that? What's going to be the method of rate of how you pass that along? It's completely
the problem.
I think
we see it as an
how
you can have
it depends how far the clients want to go, right?